Today we are dealing with a topic related to accounting, introduction to accounting. Knowingly or unknowingly, you also dealing with accounting in your home. Probably if you are purchasing some items without giving money, and at that time we will write the name of that person, that is for the purpose of giving money in future date. The amount payable to fisher vendor, milkman or newspaper boy, we will write the name of that person and the amount. But at that time we are not doing any scientific way of accounting. We are doing only single entry system of accounting. That type of accounting is known as single entry system of accounting. But for a business concern, their main aim is to earn profit. They will use some scientific technology, that is a double entry system of bookkeeping. Today we are dealing how to write scientifically accounting in books of account. We can start with a small definition. Accounting is the art of recording, classifying and summarizing financial transaction and in terms of money only. That is recording, classifying and summarizing. And all these transactions should be financial nature. Financial nature or monetary transaction, transactions of monetary value only, in money terms only. So there are various principles. One of the principles is we will write only the transaction related to monetary transaction or financial nature only. Other non-financial transaction we should exclude in accounting. There are other principles also. Separate legal entity. The owner and the business is separate entities. Owner is separate from that business. The business must give the money invested by the owner to that person who invests money. So business is separated from the owner. That is another principle. So money measurement concept, separate entity concept and all other principles we will discuss later in the next stage. Now we are starting with the definition. The definition itself states that accounting starts with the recording. For recording purpose, they are using a book named journal. Journal book. Here we are recording all the business transaction in a chronological order. We are purchasing some items, selling some items, receiving money, giving money. All items will include in this journal and it should be recorded in chronological order. But for classifying the items, the same nature transaction will be classified accordingly. For that purpose, we are using another book after journal, that is ledger. The last stage is that transaction must be summarized. The main objective of business is to earn profit. In order to arrive at the conclusion whether they get profit or loss, they will write profit and loss account and balance sheet. Profit and loss account and a balance sheet. These are the main books written by a business firm. So how to write the business transaction in journal? We already studied that. In our home we are using only single entry system. At that time we are not using any scientific technique. But at the same time, here we are using a double entry principle. For example, if we are purchasing some item, a furniture, for example furniture, we are purchasing furniture. At that time we will get furniture and we are giving some money to the person who gives us furniture. One item is coming to our firm and another item is out of our firm. So, we will consider all the two aspects of every transaction. In the case of furniture purchased, furniture and cash, furniture coming to our business and cash are going from our business firm. That is double entry principle. We are using that double entry principles while recording all the items in journal. So, how to write these items in journal? While writing a transaction in journal, a transaction contains two items, one should be a debit item and another should be a credit item. All the transaction must have one debit item and one credit item. For the purpose of learning easily, we are classifying all the items which are included in a business transaction in four categories. The first item is asset. Assets you know, cash, land, building, furniture, vehicle. Asset means cash and valuables owned by the business. So, first item is asset. Second item is liabilities. Third item is expense. And the last item is income. In the earlier transaction, furniture is an asset. Liabilities means just opposite to an asset. Our obligation to pay some money later. We are taking some bank loan and we must pay the bank loan in a later stage. That is our obligation and that is a liability, just opposite to an asset. Expense means we are giving some money, we are incurring some amount. In return, we will get some revenue. For getting some revenue, we are incurring some amount is known as expense. Income is just opposite to expense. Through sales or while receiving some money, we are getting some income or revenue, that is income. So, all the items should be classified into four categories and the principles of debit and credit is different in these four categories. First one is asset. So, in the case of asset, when the asset increase, we should give a debit to that asset. Debit, DR, the short form of debit, and if there comes a increase, that asset should be treated as a debit item. You should keep in mind this item only. If you have an idea about these principles, all other principles are based on the basic principles of when asset increase, that should be debited. If there comes a decrease in the case of asset, at that time we must give a credit. If asset increased, we must give debit. If asset decreased, we should give credit. All other principles are based on the asset rule. See, liabilities is just opposite to asset. So, if asset increase, we should give debit. So, liability increases, we should give credit. Just opposite to that liabilities. Asset and liabilities are opposite item. So, the principles also opposite item. Asset increase, we should give debit. Liability increase, we should give credit. So, liability decreased, we should give debit. The principles of expense is same as an asset. So, when an expense increased, at that time we must treat it as a debit. When an expense decreased, we should treat it as a credit. The principles of income is same as liabilities. So, when an income increases, we should give a credit. When it decreases, we should give a debit. This is the basic rule of debit and credit. So, if you have an idea about this basic rule, we can easily write down journal, ledger and a balance sheet. So, we can start with a journal book. Journal is having a separate form. In the left hand side, there is a date column. After that, there is a particulars column. Then there is a ledger folio column and two amount columns in the right hand side. Date, particulars, ledger folio, debit, credit, amount. When a business starts with cash, there should be two items. One item is capital and other item is cash. A started business with rupees 1 lakh. First transaction, A started business with rupees 1 lakh. This is the first transaction. In this transaction, there are two items. What are the items? One is cash, started with the cash. Another item is that cash is used as capital. These are the two items. Okay. One is cash and another one is capital. So, what is the nature of cash? We already stated that cash and other valuables is treated as an asset. So, cash is an asset. What happened to that cash? That is increased or decreased? When that amount comes to a business, cash is increased. The principle is when cash is increased, cash should be debited. The debit item should be written at the first time in the left hand side of the particulars column, cash. Debit item should be written as cash, A bar C means account, then debit. Cash is an asset which increased and cash is debited. What is the amount in debit column? 1 lakh. 1 lakh. What is the credit item? Is capital a credit item? Capital is the amount given by the owner. According to separate entity concept, the amount invested by the owner should be repaid by the business to the owner. So, that is a liability for that business. So, capital is a liability. So, what is the principle of liability? When it is increased, it should be credited. Here also capital increased, so that should be credited. So, cash account debit and the capital account is credit. The credit item should be started with the word to, then capital, after having some space to capital. This is the way of writing debit and credit item in the journal. Okay, the amount is capital is rupees 1 lakh. And there is a small description of this transaction that is called as narration, started business. Okay. The first transaction completed. The second transaction, he started business with cash is first transaction. There is a date column. The second day they purchased, or the same day they purchased some furniture. Purchased furniture. Purchased furniture for rupees 12,000. 12,000. They purchased furniture for rupees 12,000. What are the two items here? One item is furniture. They purchased furniture. For purchasing that furniture, they must give cash to that firm or the person who are giving furniture to that firm. So, two items are, one is furniture and other one is cash. Cash and furniture. Two items are, one is furniture and another one is cash. What is the nature of furniture? Furniture is an asset. Here furniture is increased. When asset increased, we should treat it as a debit item. So, furniture is a debit item. Furniture, account, debtor. What is the nature of cash? Cash is an asset. What happened to that cash? Cash decreased. We are giving some money for purchasing that furniture. So, that item is a credit item. Furniture account debtor to cash for rupees 12,000. The narration is bought furniture. Bought furniture. So, the second transaction also completed. The third one is salary paid. Salary paid. Salary paid. Rupees 7,000. Salary paid rupees 7,000. So, what are the two items? One is salary. Salary. Salary paid as cash. So, the second item is cash. One is salary and other one is cash. Here the nature of salary is an expense to the firm. An expense means an expense should be debited when it increases. Here salary increased. So, expense increased, salary increased. So, salary is a debit item. Salary, account, debtor, debit to cash is an asset. When we paid salary, that asset is decreased, cash is decreased. When cash decreased, that is a credit item. Salary to cash. Salary paid. Salary paid. That is a narration. Amount is 7,000. Salary 7,000 as cash 7,000. One more transaction, received commission. Received commission. The fourth transaction is received commission. Received commission. Rupees 5,000. 5,000. They received rupees 5,000 as commission. What are the two items? One is commission and received as cash. Received the amount means they get some cash. So, commission is one item and another item is cash. Commission, here commission is an expense or income. When we receive an item, commission is an income. When we give that item to other person, that should be a expense. Here we are receiving commission. So, that is an income to the firm. So, commission means an income. When income increases, we should give credit. So, commission is an income and when it increases, that should be treated as a credit item. Cash is an asset. When cash increases, here cash is increasing because we are getting some money. So, cash is increasing. So, cash is a debit item. So, cash is a debit item, cash account debtor, commission a credit item to commission. Amount is 5,000. 5,000. Received commission. Received commission. This is the form of writing all business transaction in a journal book. It is known as journalizing. So, the first process is completed, journalizing is completed. The second process is we are transferring all the items entered in a journal book to the ledger. That process is known as posting. Posting means we are transferring all the items entered here, because we are entering all the items here in a chronological order. All the items we are entering here, there is no specialist nature to this account, but in the case of a ledger account, we are entering all the transaction in a specialist way. It means the same transaction should be recorded in a single book. So, here there are cash, capital, furniture, salary, commission. There are 4 or 5 items, and each of these items have separate ledger account. Okay. How to write items in ledger? That is a second step in an accounting. The next stage is to transfer all the items entered in journal book to the ledger. So, the first ledger is cash. Ledger is not same as journal book. It is written as a T form, and the left hand side there is a date, particulars and journal folio and amount column. In the right hand side also the date, particulars, journal folio and amount column. Here we can see that in journal book we are giving a ledger folio column, but in the case of ledger book we are giving a journal folio column. This is the page number of this item in the ledger book, that is ledger folio. The page number of journal folio of that particular item is written in journal folio column of a ledger account. So, how to transfer these items? The first item is cash account. In cash account, we should write the opposite item. The opposite item means in cash account, the opposite item is capital, and the capital start with the word 2. All the 2 items should be written in the left hand side of a ledger. See, cash to capital, left hand side, to capital. The amount is 1 lakh. 1 lakh. In capital account, we should write the opposite item. Opposite item is cash account. This is the proper form. I just shortened the form into particulars and amount column only. All the ledger should be written like this. So, the capital account, the opposite item is cash. If the item is start with the 2, we should write in the left hand side. Here in cash there is no 2, so we can write it on the right hand side of capital account as by cash. The amount is 1 lakh. So, the first transaction is transferred in the particular ledgers. The second transaction is furniture account debtor to cash. In furniture account, the opposite item should be right, and the opposite item is to cash. So, that item should be right in the left hand side, to cash. Amount is 12,000. 12,000. Furniture having 2 items, cash and furniture. In cash account, the opposite item is furniture. In cash account, the opposite item is furniture. Furniture should be right here. Furniture. The amount is 12,000. The opposite item, furniture to cash. In furniture account, to cash. In cash account, by furniture. By furniture. Buy furniture. So, the second item in furniture account, we should write the opposite item because it is started with the 2 and we should write it in the left hand side. In cash account there is no 2 items, so we should write the furniture in the right hand side. Buy furniture 12,000. The second transaction is completed. The third one is salary to cash, salary account debtor to cash. In salary we should write as to cash, salary to cash 7,000. In cash account, by salary, by salary 7,000. The last transaction is cash account debtor to commission. In cash account, to commission, to commission, the amount is 5,000. In commission account, by cash, by cash 5,000. So, all the transaction we already transferred to the ledger account. So, the last step is to balance these ledgers. How to balance a ledger account? Balancing means to add the debit and credit items and compare left and right hand side. Which one is higher item is right in the last part. When we calculate the left hand side 1,05,000, the right hand side 17,000. So, we should write 1,05,000 which is the highest amount, 1,05,000. The highest amount should be written down in the 2 sides of the particular journal, 1,05,000. So, this side is 1,05,000, but when we calculate the right hand side is having some shortage. That shortage is known as balance, and we should deduct the total item 1,05,000. The total is 17,000, 12 and 7, 19,000. 1,05,000 minus 19,000, 86,000. So, the 86,000 is the balance. This is the way of balancing a ledger account. This is the balance, balance C bar D, carried down. All the ledgers should be balanced like this. In the case of capital, in the right hand side there is 1 lakh rupees, but in the left hand side the amount is nil. So, here comes the balance rupees 1 lakh. In the case of furniture, left hand side is 12,000. So, the highest amount is 12,000. Highest amount should be written down here and the balance is 12,000. In the case of salary, the highest amount is 7,000. 7,000. The highest amount should be right in both the side of that particular ledger, and here the balance is 7,000. Balance carried down 7,000. In the case of commission, the highest amount is in the right hand side. So, we should write 5,000 in each debit and credit side, and the balance is 5,000. So, balancing of particular journals is also completed, and the next stage is the summarizing stage, and summarizing means to know the particular amount or profit or loss raised by the business, whether they get some amount as profit or loss. For that purpose we are using profit and loss account and balance sheet. that part will be discussed later. Before that, we are using double entry principles here. We are using the principles, one item should be treated as a debit item, another item is treated as a credit item. Whether the principles is right or wrong, in order to arrive at a conclusion, we should write another statement known as trial balance, just for knowing the arithmetical accuracy of these debit and credit rule. Whether it is right or wrong, we are using the debit and credit rule. While we using debit and credit rule, there may be some reason for not adequate result will come because of the double entry principles are not using correctly. So, in order to know the arithmetical accuracy, we are preparing a statement known as trial balance. If the trial balance is equal in the debit and credit side, if both sides are equal, it means that the principles we used is correct, otherwise there are some errors. So, how to write a trial balance? In trial balance, there is a particulars column in the left hand side, and right hand side 2 amount column, one particulars column and 2 amount column. Particulars, debit amount and credit amount. Trial balance. All the ledger items balance should be transferred to this trial balance. The first ledger is cash. Cash is having a balance of rupees 86,000. 86,000 means when the left hand side is higher, the balance is known with that side. Here the left hand side is having more amount, 1,05,000 here, here only 19,000. So, it means that it is having a debit balance of 86,000, debit balance. The side is known as debit balance because the left hand side is having much more amount than the right hand side. In the right hand side only 19,000, in the left hand side 1,50,000. So, the right hand side is debit, left hand side is debit side, then the balance is 86,000. It is a debit balance because the left hand side is more amount. Left hand side having more amount as 86,000 more than the right hand side. So, the debit side is 86,000 greater than the credit side. So, cash is a debit balance item. The second item is capital. In capital items, left hand side is greater. Left hand side is greater. Rupees. No, in capital account, right hand side is greater than the left hand side, cash. In capital account, 1 lakh rupees. Credit side is greater than debit side. In the case of furniture, left hand side is greater than credit side, 12,000. In the case of salary, left hand side is greater than credit side, debit side is greater than credit side. In the case of commission, the right hand side having much more amount than debit side. So, credit balance, commission 5,000. Debit and credit. Just to add the items of debit and credit. Credit side 1 lakh plus 5,000, 1 lakh 5,000. Credit side 86 plus 12 plus 7 is equal to 1 lakh 5,000. It means that the principle used here is accurate and the arithmetical accuracy is tested through trial balance. So, the main portion is covered here, only the recording part and the classifying part. The last part is summarizing part. This is not the summarizing part, this is for the purpose of just to understand the arithmetical accuracy only, and the last part summarizing stage will discuss in the next section, that is a preparation of profit and loss account and a balance sheet.